Hey, everybody, welcome back to another episode of the Growth Capital Podcast. I'm your host, Justin Dixon, and today we've got John Van Tuin on the podcast. He is a managing director with P4G Capital Management. He lives in Miami, but they're based out of San Francisco. John's been in the private equity world since the mid to late 80s. So he's been kind of seen it all and been through a lot of different market cycles. Today we talk a lot about P4G, how it got started, the verticals and industries that they focus on, as well as their investment criteria. We also unpack a little bit about kind of the state of the market. We're recording this in August of 24, and so we talk about potential rate cuts, how that may impact the buyers and sellers on both sides of these private equity deals. And then we talk a little bit about Miami and how he lives in his own favorite vacation spot. So let's get John on the pod. Interested in hearing conversations with private equity leaders, CEOs of private equity-backed companies, and startup entrepreneurs where they share their stories about their career journeys, starting, investing in, and scaling successful businesses, and the important role that having the right talent plays in building a successful business, then you are in the right place. Welcome back to another episode of the Growth Capital Podcast. Here's your host, Justin Dixon. All right, John, welcome to the podcast. Happy to have you on.
Yeah, Justin, I really appreciate you reaching out. Happy to be here and look forward to it.
Well, let's jump right in. Give the listeners kind of a little bit of an overview of who you are, where you are, and then we'll kind of jump into some other stuff.
Great. Again, John Van Tuin, Managing Director at P4G Capital. Private equity fund out of San Francisco. I run our origination efforts for P4G. We have 6 people on the deal team out in San Francisco. I'm actually headquartered out of Miami, but do spend time in San Francisco with the deal team. Also sit on the IC. Extensive background within private equity. Been at this since 1987, so you can do the math. I'm pretty old.
Yeah.
Started out really in my early career in leverage finance with Heller, GE Capital, and quickly transitioned over to a private equity role with a private equity firm in Atlanta called River Capital. Was there for 5-6 years and then moved to New York in 2002, where I joined a private equity fund called Bradford Equities that became that was at one time part of Bessemer Trust.
Oh, okay.
Eventually progressed through the ranks there, became a partner within the deal team. Ended up leaving after a 12-year career there, moved to Miami, joined a private equity fund in Coral Gables called Trivest, and then got recruited out of Trivest after a run there to join a firm back up in Connecticut called Clearview Capital. Was at Clearview for 5-6 years up until 2021 when I joined P4G Capital out in San Francisco. P4G at that time was raising their inaugural fund, and it was an opportunity for me to get on the ground floor of a private equity fund, and always wanted to help build a private equity fund, and got that opportunity with our founder, Rachel Lehman, who started P4G back in 2015 after really starting another private equity fund up in Salt Lake City called Sorensen Capital.
And with P4G, what's the philosophy or strategy, and what types of businesses do you guys go after?
So, good question. We focus on really 3 broad verticals, but do have a sector that we focus on from a thematic perspective. So manufacturing, industrials, business services, broadly defined business services. The thematic area that we do focus on is aerospace and defense. We have 3 people within a group called our Portfolio Resource Group at P4G that consists of individuals that come from a 20-30 year background within A&D. So it's a space we know extremely well, and a space that we feel like we can be great partners to management teams in deals that we partner up with.
And are you going after like what size of deals? And are you doing majority buyouts or are you minority investors?
Yeah.
What's that
So
model?
we're a control investor, typically founder-owned, family-owned businesses, but also do corporate carve-outs, divestitures, and kind of second-generation private equity-owned deals. 3 to 25 is what our size range is in terms of EBITDA.
Okay.
For platform companies, add-ons will do any size as long as it kind of makes strategic sense for the portfolio. Capital, from a capital perspective, we're writing equity checks anywhere from 15 on the low end to 75 million of equity. And as I mentioned, we're a control investor.
Yeah.
And we've done 6 platform investments since we raised the inaugural fund in 2021. I would say 3 of the deals that we've done out of the 6 are more A&D focused. The other 3 more broadly fall into the 3 verticals that I mentioned earlier that we focus on.
And are you still on deploying capital out of that fund one, or have you started on additional funds?
Both. So we are still deploying capital out of Fund One. We have room to do 1 or 2 more transactions out of that from a platform perspective. And
Yep.
then we are starting to circle our second fund with our current and new LPs.
That's exciting. I mean, you said you got in on the ground floor, kind of as they were raising Fund One, and so now you've been able to kind of see that almost to the fruition of deployment of Fund One, and now you're in that kind of nice zone of getting that second one up and running. Um, how have you seen kind of the evolution go from starting out, back a few years ago to now, as far as ease of raising money as well as just the deal flow and any
Mm.
deltas between what the sellers are asking for and what you as a PE firm are open to offering as far as deals.
Well, I mean, the private equity landscape's completely changed since when I initially got into the business. It was a cottage industry back in the 80s where you often got introduced to deals through just relationships you had or through accounting firms, M&A attorneys. There was no such thing as the third party diligence that really exists today in the ecosystem that's kind of grown up around private equity. And it's evolved into where you now have 3,500 plus private equity funds in North America investing and holding a significant amount of capital and dry powder. I think it's over $1 trillion or close to it, along with all the kind of private credit funds that have sprung up over the last 10, 15 years to support private equity acquisitions. It's completely changed kind of the competitive landscape within private equity in terms of just the amount of capital, but also the competitiveness in terms of valuations. Valuations have continued to move up since I've gotten into the business, in particular since the great financial crisis in 2008. We did see a pullback during, a couple years after COVID and currently, given some of the economic uncertainty that was in the market, and a pullback from private equity investing, particularly over the last 18 months, not only investing, but also exiting businesses because of that uncertainty. And, my expectations are for the market to kind of bounce back here in 2025. I thought at the end of 2023, 2024 was going to be a better year than it's turned out to be. Some people have had great years, some people have not, which is typical in a market. But for the most part, deal flow is slightly down from
Yeah.
last year or slightly up, depending on who you talk to. I think the big challenge this year for private equity groups has just been kind of the unevenness and spottiness of the quality of deal flow. And that's been a consistent theme really over the last 24 months. I think anytime private equity is not a seller in the market, which they really haven't been over the last 2 years, your deal flow, whether you invest in those types of assets, kind of second generation private equity owned deals, is going to impact how you kind of view deal flows. They tend to be the better run assets, and when they're out of the market selling, it's definitely going to impact how people view the quality of the deals that they're seeing. I thought in the back half of this year we would see a pickup. We've seen a trickle, but nowhere near the floodgates that need to open,
Yeah.
given the backlog that are sitting on people's shelves on the investment banking side of private equity firms, kind of waiting to time the market on exits. I think 2025, if the macro holds in, we should have a really pretty big year in terms of private equity exits, just given the average age of portfolio companies at record levels within private equity firms and the need to get distributions back to limited partners, in particular if you want to raise another fund.
Yeah, I was going to ask about that because obviously, it's you have to have sellers. Like in your case, you look at founder-led businesses, right? So you have to have people starting and building businesses to a certain level to get attractiveness from you and other private equity. But then there's also the other side of that where you've got private equity firms holding on to deals that maybe they wish they would have exited in 2021, when valuations were high, and now they're having to kind of almost recycle those deals because maybe they didn't perform as well, and so they need to get operations back up and running. So there's kind of a couple kind of headwinds, but also there's opportunity, I would say, if you can swoop in and get some of these deals. How do you see it going, and do interest rates kind of impact one way or the other, kind of the outlook, assuming we see some interest rate cuts?
Interest rate cuts will definitely impact kind of market psychology of both buyers and sellers. I think, though, within the lower middle market, the movement in interest rates is not material in terms of impacting M&A activity, just simply because those deals are typically not deals where you're trying to really maximize leverage, where you're getting, north of 5x leverage on a deal. Maybe on A assets, you're getting that type of leverage, where you have what I call the lower middle market unicorns. But for the most part, it's going to impact more investor psychology. So as people see interest rates coming down, that's going to provide tailwinds to the M&A market moving forward here, hopefully this month
Yeah.
with interest rate cuts, right? And if that continues, it's just going to provide more momentum. But there's a huge backlog of deals just kind of sitting on the shelf waiting for kind of the go button to bring to market from a lot of the bankers, and particularly the bigger investment banks that I talk to that typically are the representing private equity firms in their sell sides.
There's this like concept of the silver tsunami that's out there in the kind of services businesses, and I don't know if they're maybe smaller than what you guys would go after, but this baby boomer generation that built commercial and home services businesses that are trying to retire and all of that. Do you get into any of that space?
Yeah.
And again, is that some of these may be smaller because they're typically 1-2 million in revenue versus
Right.
a few million in EBITDA, I guess.
Yeah, I mean, we don't go that small, but you're correct. There's been a large private equity interest in home services, whether that's HVAC, residential plumbing, paving, pest control, even in the pool maintenance and pool construction. We've seen some roll-up plays appear in that. So home services has definitely been a hot spot. Acquiring businesses 15 years ago, you couldn't give away a residential plumber or residential HVAC business to a private equity fund. And then they got the great idea, their smart idea that, hey, we can consolidate this industry. It's highly fragmented. It's an essential service to a homeowner that can't be put off. And you've seen the market kind of explode. I think there's over 30 plus platforms now on the residential HVAC plumbing side of the market.
And do you think that market now, given that private equity has swooped in, do you feel like that is already saturated to the extent that it's hard to find any diamonds in the roughs out there?
So some people do, some people don't. From my perspective, and P4G's perspective, we just feel that we're a little late to the game to start a platform in the residential HVAC plumbing space, simply because As I mentioned, there's 30 plus platforms already out there. The real play was to acquire a platform, small business, 3 to 5 or thereabouts of EBITDA, and then do add-on acquisitions and be a serial acquirer within a regional area of the country and build up a significant platform. The problem, from my perspective, of doing a deal in that space now is that you're going to be bumping up against 30 other platforms for any type of add-ons.
Yeah.
And so valuations have really moved from an add-on perspective, and being able to blend down your multiple on your original platform investment, if you're paying, 10 times for a business, which you typically would pay for a business in that industry that has any type of scale, you're going to have to compete with the other 30 plus platforms out there that are bidding on the same add-ons.
Yeah. How does your talent strategy play into pre and post acquisition? My background's all in recruiting, and I
Yeah,
do a lot of work in the private equity world. So I don't want to make this a recruiting podcast, but I'm
right.
very curious about especially some of these smaller businesses having one bad apple or one really great apple can really impact positively and or negatively a business. So when you're looking at platform acquisitions, how does that talent strategy come into the due diligence process?
To me, it's the most important thing. A lot of people focus on the numbers, but to me, at the end of the day, it's a people game. And to be successful in private equity, you really have to make sure you have the right people in the right seats and people's interests are properly aligned in terms of outcomes that you're expecting. And we spend a lot of time at P4G upfront and post closing, making sure we have the right people in the right seats that can drive our value map once we're in a deal. And I see, a lot of people spend, and it's the hardest thing to really evaluate is the people part of a deal,
Right.
because it's not as easy to get your arms around. People can do 2 plus 2 on a spreadsheet and understand what the result is, but when it comes to people and leadership within a private equity or within a platform investment, to me, it's the most important thing. At the end of the day, I don't really care what the company makes or what their service is. If you're going to be successful, it's people that are going to make it happen.
Do you use any specific assessment or any tools as you're going through the leadership, pre-acquisition to be like, all right, we think we've got a great acquisition or a leadership team. We
Right.
won't really need to adjust that post-acquisition, or hey, we've got a gap in marketing or product or whatever the case is, and this will be an area that we know going into it we need to bolster in order for us to achieve the goals that we're outlining.
Yeah, we'll do that internally, and we'll also bring in third-party providers to help us do a kind of leadership team assessment, how they work together, and then also individually. And if there are gaps in the team, it's something that we want to be aware of prior to closing a deal. And typically, we'll be far down the road in terms of identifying people that we can put in to a platform investment, whether that's from a CEO on down throughout the organization, so that we hit the ground running. Time is of essence in private equity. As soon as you close a deal, the clock starts ticking, and
Right.
we're really focused on, again, having the right people in the right seats, not only during the deal, but when we go to exit, pointing to a team that's there for the next owner.
And so you're essentially, if I heard you right, it sounds like you are proactively kind of finding the talent because post close you're going to have to replace whether it's CEO or CMO or something like that. You're kind of
Yeah,
proactively
or they
going
may not
after.
have one, right? The
Yeah.
CEO may be the owner of the company and he's looking to transition out over, 6 to 12 month period. And so we're aware of that up front. We're aware maybe their sales team needs to be further developed. We're aware that maybe the internal plumbing of the business, i.e., their IT systems, financial reporting, sales, marketing, may be lacking. And so all of these are kind of put into our what we call our value map prior to closing the deal, and is in in conjunction with the management team being on board with us and helping us really kind of develop that plan. And then day one, when the deal's closed, we start executing on that plan.
And when it comes to the founders of these businesses, what, I guess, percentage wise, and these don't have to be exact accurate, I'm just kind of
Right.
curious, the percentage of founders that remain as the CEO and founder post acquisition versus having to change that person out, whether it's they want to, move on and do
Right.
something different, or it's you guys identify, hey, this is not the right person to take us to that next level of growth.
Yeah. So if there's I would say that in probably 80+% of our cases, the management team is already in place, and that includes the CEO.
Oh, nice.
And there'll be cases where the owner of the business is not actively involved in the business and has brought in professional management, has built out a management team.
Yep.
That's what the smart ones do.
Right.
Particularly if they're not looking to stay in a deal post closing, to maximize value. And we'll work with those management teams. Typically, there's rollover equity from the management team, incentive plans from an equity perspective to make sure, again, everyone's interest is aligned with our interests in terms of building value in the business moving forward.
Well, that's great. I mean, obviously, if you can get into a business that has a management team that is going to be there for the post acquisition part, that's always better than you can focus your efforts on other things and more
Right.
tweaking versus having to do mass changes.
And it may not be like a complete management team. Like I said, there may be holes in the management team that you need to fill post closing. And so we just want to be aware of what those holes are and diligence kind of around that, and making sure that we do have somebody that's close to onboarding once we close.
Yeah. Geographically, are you seeing deals pop up in different parts of the country that then maybe weren't before? Or like, how do you think about geography when it comes to your due diligence also?
So just from an origination perspective, we covered the whole kind of North America. So really the Canada and the U.S. And
Okay.
our deals are pretty spread out across the country and Canada in terms of platforms and add-ons that we look at. And there's no real particular area of the regions that's stronger than the other regions. We do focus, I said earlier that we do have a thematic approach on one sector, which is aerospace and defense. And there's certain areas of the country that are A&D heavy. And so obviously within those areas, whether it's Southern California, Wichita, and other parts where A&D has a presence, maybe up in the Seattle area, we spend a little more time looking at deals in those areas, just given our kind of A&D thematic approach in those sectors.
Got it. So I guess the crystal ball question, you're
Right.
sitting, we're recording this in a year from now. What has happened in your mind within P4G and the market, and how does that outlook look for you over the next kind of 12 months?
Yeah. So as mentioned earlier, I think 2025 is going to be a big year, particularly for private equity exits. In particular, if the macro holds in and there's no kind of exogenous shocks to the economy, just given there's a lot of pressure building with the amount of the average age of portfolio companies within private equity is at record levels. I think it's over 6 years. You have a lot of private equity groups that have held off the last 2 years selling any portfolio companies that are sitting on the shelves of investment bankers waiting for the right opportunity to come to market. You have a ton of private capital out there from a credit perspective looking to finance these deals. That private credit has been a big fundraiser over the last 2 to 3 years, and really has stepped up from the bank pullback. You're also looking at, I think, just with the macro environment, the interest rate cuts that are expected to come here, hopefully again this month and maybe continuing on into 2025. That's just going to add additional momentum to the M&A market and really kind of provide a psychology shift for a lot of buyers and sellers, I think.
Yeah, I would say, based on some of the stuff that I read and other people I talk to, I feel like the sentiment is kind of similar, is that there's a lot of opportunity, potentially pent up opportunity, right? People want to buy, and also PE firms want to sell, some of their platforms to kind of free up capital, return money, and then, go after the next round.
Right.
Um, And so I want to kind of wrap up here with a three pack of questions that I'm asking everybody, and they're a little bit more kind of directed at you versus kind of the markets and everything. But what's your favorite business book that you're into right now?
So I grew up playing a lot of sports. I had three younger brothers, and so I love kind of reading any type of leadership book, whether it's sports related or business related. So that's kind of when I can spend my time really looking at or reading is anything regarding leadership and managing people and driving performance within organizations like, private equity does.
Yeah, I'm sure you read like the book called Shoe Dog or whatever, the Nike leader book.
Yep. I read that one.
Yeah, I've really enjoyed that one. That one's been a recent read, but it's a good one. I know it's been around for a while, but all right. Question two: if you weren't doing private equity, because obviously you got into it pretty early in your life, like if you could start over, what kind of a job or industry do you think you would want to jump into? And you can't be like a golfer or whatever, because that's what everybody, I feel like everybody would say is like some athlete, but something in the
That's what I was going to say. If you can give me Tom Brady's football IQ and
go.
his moxie and his arm, that's what I would want to be.
So
But
NFL
with
quarterback.
not saying that, I guess it's something that I really haven't thought about. I'm really fortunate because when I was in business school, before really private equity was even really known, it was a very much a cottage industry, and I always wanted to be in private equity and got into it fairly quickly when I got out of business school, and it's something that I truly love and really kind of don't view it as a job
Yeah.
for me. So I'm lucky that I have that passion and excitement every day when I would wake up in the morning and looking for our next deal and helping to build P4G. It's something that again is not a job for me, so I'm really fortunate. It's something that I love to do, and I guess I'm one of the lucky ones.
Yeah, I mean, when you love what you do, you don't wake up and it's not work, right? It's just you
Right.
wake up and you get to have fun and enjoy what you're doing.
Yeah.
Last question: what's your favorite vacation spot, whether in the U.S. or international? You pick.
So Justin, I live in Miami.
Well, so some people think that's a vacation spot. Other people would maybe they vacation in like Denver or the
Right.
Alps or something.
So
Again,
yeah, my wife's like, John, where are we going to go on vacation that I'm going to have more fun and enjoyment and have this beautiful view that we have from our condo than Miami? And so this is our not only our home but also our vacation spot. I always kind of pinch myself when I moved down here 12 years ago. We would see people every Sunday line up at the beach with their suitcases heading back to wherever they
Yep.
came from, and so I always had to pinch myself that I actually get to live here and experience the natural beauty and the climate within Miami. So it's been an awesome environment, and love it here. So
Yeah, so you're doing what you love, and you live in a place that's a vacation spot for you. So you're kind of in the perfect spot. It sounds like both
yeah,
professionally
definitely
and
blessed,
location wise.
and much appreciate.
Yeah, no, well, John, this has been awesome. I really appreciate the time and the insight, and yeah, good luck in the rest of this year in 25, and we'll talk soon.
All right, Justin, I appreciate it, and thank you.
Thank you. Awesome. I hope you found at least one actionable insight from this episode of the Growth Capital Podcast, your one-stop shop for insights from private equity leaders, CEOs, and startup entrepreneurs on starting, investing in, and scaling successful businesses, as well as the role having the right talent plays in growing a successful business. It would be greatly appreciated if you would rate and review this podcast. And if you're watching on YouTube, please like and subscribe and drop us a comment so we can expand the audience of this podcast. Thank you for all your support, and don't forget about upcoming episodes dropping every Tuesday.